Well, g'day and welcome back to another episode of the StoneX Australian Cattle and Beef Market Report. My name is Ripley Atkinson. I'm the Australian Meats and Livestock Manager for StoneX based in Sydney, where we're developing price risk management tools for the Australian livestock industry to help the sector manage market and price volatility with our Australian feeder cattle forward contract. We're brought to you by StoneX Group, a Nasdaq listed global financial services network with 100 years of experience in global commodity markets. Remember that the trading of derivatives such as futures, options and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. Well, today in the Kansas City office, fortunate to be joined by Adam Stout and Ben Parks. Fellas, thanks for coming on. Good to be here, and I think even better to do it in person. Welcome.
Well, thanks for the invite, and thanks for joining us in Kansas City finally. So good to have you.
Nice to be back.
Yeah, absolutely, Rip. Looking forward to it.
As we know, today just keen to have a bit of a chat, get your thoughts, views, perspectives on where you're seeing the US market, how it's been performing this year, and you know, some themes and factors that you're picking up, which I think will be quite interesting for the Aussies back home to understand. But before we get into the actual discussion, for our Aussie listeners, give us a bit of a rundown of your background and both of your roles at StoneX, how long you've been with the business, and yeah, just a bit of an overview of where you fit in.
Sure, I guess I can kick things off. Ben Parks, I've been with StoneX for going on 24 years now, so it's been a bit. It's been a good run, and I've been here as a risk management consultant the entire time, working primarily in the meats and livestock space. Our customer base is pretty diverse, as you know, Rip, but for the listeners, our customer base ranges from commercial cattle and hog producers to packers, so slaughterhouses, facilities, to further processors who may be taking raw beef and pork and processing it into a finished good. And we also work with some end users as well, so think retail restaurant chains, grocery stores, et cetera. So our customer base is pretty diverse, but everyone's got an interest in the meats and livestock space for sure.
Yep, and Adam Stout, not terribly dissimilar from Ben. I've been with StoneX for a little over 21 years now, and so I mean we work the book together, work the desk together. We've sat within 6 feet of each other for 20 years, and so same client base, and yeah, it's been a good run.
And pretty diverse group of people. You know, you guys are working with right from your producers through to those end users. It must be pretty rewarding and pretty interesting in terms of the market scenarios and the customers and clients you deal with. I think that would be pretty cool to see across multiple proteins too.
Yeah, absolutely. I think one of the benefits, right, is working with folks all along the value chain. It helps as you form your own market opinion, right? You're not always consistently hearing the viewpoint from one side. And so I think that's always been one of the big value points for us, is that as you see it touch every step of the value chain, gives you a little bit of idea on, how market conditions are impacting everyone at each of those stages.
And I'd say it's also diverse, geographically too. So a lot of the producers are here in the central U.S. where we are, but a lot of our end user clients and manufacturing clients might be on the coast. So we get a little bit different perspective just from different geographies on how, maybe how Mother Nature's cooperating or not in that area, to even some consumer sentiment in different parts of the country and what consumers might be doing. So I think the geographic diversity helps as well.
100%. And Benny, you mentioned, weather conditions. I think a good place to start. It's always comes up in conversation, particularly for the Australian market. To kick off, where are we seeing seasonal conditions at the minute? We're obviously in summer, bit of a broad general overview, how things looking seasonally.
Yeah, so it really depends on where you're at. I without looking at a drought map here in front of me, but just to describe it, I would say the western half of the country is experiencing some drought. It's been extremely hot and dry here from Kansas and points west, I would say, over the past several months, especially the Pacific Northwest. So like Washington State, Oregon State, Idaho, they've got some real bad wildfires going on up there right now. They've lost some pasture as a result. The eastern half of the U.S. is in a little better shape moisture-wise. Some areas of the eastern U.S. have plenty of moisture and no drought existing in those areas. So I would say it's very regionally diverse as far as where we stand drought-wise. But I would say primarily where the majority of the cow-calf production is located, we've still got some issues. I mean, it's dry. And so where we've got dry pastures and maybe hay prices are high, it's really hard to see any expansion in the cow-calf herd in those areas. And so I think just big picture, I know you've asked about just the status of the herd and whether we're going to be seeing an expansion coming soon. We've still got Mother Nature that's not cooperating in some pretty key areas of the country.
And on that, I remember when we spoke to RT 6 months ago in March here as well, he had the same, the update was the same about that western half of the US was, into the Rockies and that way was struggling. Yeah. It doesn't, by the sounds of it, seem to have improved. And obviously big, breeding areas where big numbers of females are, that's obviously reasonably frustrating for the market if it just can't get itself out of that rut. But that's what you're dealing with seasons, I suppose.
Yeah, it does seem like, I don't know, there was maybe some hopes that things were starting to turn. I mean, as you went back to the spring, late winter into the spring, but with the conditions that we've experienced since, and then especially here of late in the summer, yeah, I mean, I'd even argue that we're probably in a worse drought scenario right now for parts of the country than we were a year ago.
Mm-hmm.
We did just have a USDA semi-annual cattle inventory report that was out this last month, 3 weeks ago or so. Basically showed no real expansion. The cow herd is still slightly smaller year over year. The calf crop's down, estimated to be down about 1.5% year over year. We do see some replacement heifers. So these are replacement animals coming into the herd that's up something like 2 or 3%. So maybe some replacement animals are getting rebuilt, but man, it just takes a long time, as you know, Rip, to change herd dynamics is a multi-year process. And I think big picture, we're seeing the herd stabilize, but I wouldn't go so far as to say that we're seeing any real expansion or growth at this point.
Stabilization is probably better than continued liquidation, I suppose. Yeah. So that's a start.
Absolutely.
After the sort of rough run you've had for 5 or 6 years, I think I want to throw in. I threw it out to the audience over the last couple of weeks. Amy from the Darling Downs in Queensland, she had a question on where things are at, and having been over here now for a week or so and just chatting to people and talking to you guys in the office, etc. It's always seemed to be coming up, and the theme. I get is it won't, but Amy's question was, do you think it's ever going to get back to pre-drought levels, or are we in a new phase of the American beef herd in terms of numbers and where it's ultimately going to sit?
Well, this conversation actually just came up in a meeting that Adam and I had yesterday with a big beef end user customer of ours, and I think the way we described it for them was the U.S. cattle herd has been contracting since the 60s. I mean, we're going on 60 years of seeing contraction in numbers. And we have waves along the way, right? I mean, we'll see a trough, we'll see a 5 or 8 year rebuild, and then we'll, contract again into new lows. So the trend has just been down for 60 plus years. And I think that's still likely the case. We might see a couple year upswing here, stabilize this year, maybe next. 2028, we might grow it a little bit. So we could see a little upswing here, but I think the trend is pretty well established that the animal count's getting smaller. But you mentioned what Ryan had explained here a few months ago on the podcast was we've got 2 markets. We've got a cattle market that we're concerned about animal head counts, but we've got a beef market that is being significantly augmented by heavier animals, right? So we've got less animals, but they're much heavier. And so our beef production does not look like the declining cow herd that I've described. So while animal counts are getting smaller, our beef production doesn't look quite like that. And that's, obviously absolutely the case this year. Adam, carcass weights today are up 3% year over year, record heavy. And last year at this time, they were up 3% on the prior year. So, I mean, we've seen some significant expansion in carcass weights just the last few years, that's helping keep our beef production more steady than the animal counts would indicate.
And then a second part of Amy's question, which I think ties in quite nicely, the trend is established, as you rightly point out, Benny, and I think it's probably, it explains itself when Aussies ask, is it ever going to get back? Well, the data shows from the 60s from the USDA, it's really only been heading one way. And Amy's second question was, in terms of ranching in the US, how favourable is it to actually keep doing it? Like, we're obviously, by the looks of it, seeing a contraction in actual numbers of producers. Is that going to continue as well? Like, that obviously has an effect to the number of cows carried.
Yeah, and actually I would probably chalk that up to one of the additional obstacles, right, to the rebuild. I mean, we kind of talked about already the weather situation and how that plays a role. But I would say that, yeah, I mean, the other pieces that are going to compete against that, it's a aging industry. So I think demographics kind of work against a significant rebuild. You've got things, costs, interest rates. I think there's a lot of things that present challenges currently beyond just the weather. I mean, we need weather to cooperate for one, but even as that does start to turn, there are other obstacles that will slow that rebound, in my opinion.
I think the loss of land is something that has to be acknowledged as well. I mean, we've seen a significant loss of some pasture land that goes into row crops, especially here in the central U.S. So thinking like Nebraska through parts of Iowa, Dakotas even for that matter. The Dakotas used to be big pasture country, and now it's corn belt. And so we've absolutely lost some land just to crop production over the past 10 to 20 years that's contributed to this. Recreational hunting, I think that's another factor as well. Texas might be a good example of that. We've lost some land just to recreational practices in Texas. And so I think there's a lot of headwinds here that aren't going to be easily countered. And so I think it's all contributing to just a contracting industry in headcount.
It's you made a good point. Like, everything has to line up. Money's got to be right in terms of profitability. Season's got to be good. Everything. Like Australia's situation in 2020 to 23, it did line up. Money was dirt cheap. Commodity prices just kept rising, or cattle prices that was, and seasons were unreal following a pretty bad drought. Like, it does need a lot of things to stack up, and by the sounds of it at the minute, that doesn't seem to be happening. On that front, just a general bit of a picture on supply. Where are you seeing, feeder numbers at the minute, placements of cattle onto feed, kill numbers, those sorts of things? How's it looking from a calendar year or seasonal perspective for supply generally?
Well, where do you want to start, Ben? I think if you do think about the numbers, if you think about the numbers and how that situation has played out, I think probably the most notable change that's changed how a lot of that looks has been just the increase in the feeding periods. We've significantly slowed marketings in the U.S. We've fed for longer periods. And so if you think about, placements and on feed, I think a lot of those numbers don't necessarily tell the whole story, I guess is how I would say it. We saw our reduction in placement activity. We added in the mix that we shut down the border, right, which further slowed placements. But then slowly but surely, as we reduced the rate of marketings, we've kind of just caught back up now into where our on-feeds numbers kind of look consistent with what they would have been a year ago. And so I think that's probably been one of the things within those numbers that's been interesting to watch, is that the extension in feeding periods and and how that's drawn out a lot of that whole process for the industry.
Yeah, I guess I'd add that, for anyone that's familiar with the cattle on feed reports, the very top number is just number of cattle on feed in U.S. feed yards. That number is above a year ago. I mean, it's up, call it 2% year over year. But as Adam has described, it doesn't mean that we've got more animals to be harvested.
Yes.
There's just more cattle in a feed yard for a longer period of time. So instead of feeding cattle for 150 days, we're feeding cattle for 200 days. And it has a tendency to inflate that on feed number. So it's a little bit, I don't know if misleading is the right word, but it doesn't mean what it used to mean.
Yeah.
We used to look at that cattle on feed number and say, hey, we've got a lot of cattle and this is bearish, or vice versa. And today, I don't think that we really view that report in that same light anymore. So animal supplies are still tight. They're in feed yards for a longer period of time. We've got heavier carcass weights, but animal counts are still tight. The last few weeks, we're harvesting something close to 510,000 head a week, which last year at this time, it was maybe 540. And 2 years ago, it was way above that. So, I mean, we are still extremely tight on just animal, numbers that are moving through the system. Adam, you mentioned the Mexico border and how it's been closed and may get reopened here in a few weeks. That will help slowly improve animal supply, but we're talking months down the road now.
Yeah, and that situation obviously has been announced relatively recently. It's going to be a slow burn. Is that sort of your thoughts on that?
Yeah, we don't know. We've got an August 24th start date for one port of entry in Arizona. They've told us that there's going to be another couple of ports that get reopened in New Mexico after that, but there's no timeline on it.
Yeah.
And so we don't really know. I think the industry expects to see cattle flow, but I think it's going to be a relatively small number here over the next, through the month of September, likely October. By the end of the year, provided that we can get, 3 ports open, and that's a key time of year for imports anyway, kind of that October, November, December timeframe, we might be impressed, or we might be surprised with the amount of cattle that are coming later this fall and winter, but to be determined. As we've seen with this screwworm issue, it wouldn't shock me if we stub our toe and, something changes in the USDA plan. We don't know.
I also think it'll be kind of curious to see what it does look like longer term, right? I mean, as this situation has been ongoing for the last 18 months, we've seen Mexico make strides to expand their domestic infrastructure, right? They've got more feeding capacity. They've got more slaughter capacity. And so I'll be curious that, if you want to take the optimistic view and say that we do slowly rework all of this border back open, I'll be curious to see what it ultimately grows to. Mindful that I think that Mexico is going to actually retain some more of these animals, feed them out, and process them. So I think it might just be more of a case of, in lieu of importing feeder cattle into the U.S., we're just going to import the boxes.
Yeah, more beef.
Yep, exactly.
Yeah, more beef. And that, I suppose that's a really interesting point you make, Stouty, and maybe not something the Australian market understands, is that development and sophistication in the supply chain to actually retain the stock domestically, process, locally and feed. And I suppose it's a good point for us to understand. But I think the second part of what you just mentioned was the fact that imports have been strong, and you may be pulling more from an import perspective rather than producing locally. RT on the last episode mentioned, and Benny, you started with it as well, the fact that really there are nearly 2 different markets now from a cattle supply perspective and a beef supply. Do you want to just give us a bit of an update on where that's at currently, obviously tying in imports and the local situation as well?
Yeah. If you started on, if you talk about what that does look like, I don't know, I'd guess that year to date, you're talking about slaughter numbers that are down somewhere in the 8 to 10% range. We're offsetting, 3, 4, 5% of that in terms of carcass weights. And then we're more than offsetting the balance of it in increased import activity. And so, yeah, I mean, yeah, you're absolutely right. While our domestic cattle numbers are tight, beef availability doesn't look a whole lot different than it has in recent years. And so, yeah, so we've certainly supplemented our reduced production.
And then I suppose on that, it's the next part of that question, but bringing it back to the cattle side, the markets have been volatile. You know, your feeder and live cattle prices, and even the cash prices and cutouts have moved a hell of a lot in 7 months of this year. Just give us a bit of background for the Aussies on how the market's performing, what's made the volatility, why it's behaving like it is, and where it's at.
I guess I'd back up more like 6 years. I mean, we've been in a 6-year bull market that has maybe gotten a little shaky in the last 4 months, is how I would classify it. I mean, if you just kind of zoom out and just look at it, really since mid 2020, it's been an extremely organized, efficient market rally. And we've caught some volatility, right? But it's just been a steady uptrend for 6 years. I would say that something has changed really since March or April, that the market doesn't quite feel the same. And I think most of the participants here in the U.S., get that sense as well. Whether it's beef or cattle, there's something that's a little bit different here recently. And I think most right now, and we don't know, but we'll find out, in hindsight, we'll find out later. But I think right now, most people think that consumers have stepped back just a little bit. I mean, we've had some exceptional beef demand, more like protein demand. We've had exceptional protein demand here in the U.S. for multi-years. And just since March, I think something's changed just a little bit. The cutout market isn't quite performing quite like it was up until that point. Previously when packers would slow down production, the cutout market would spike higher and just make new highs. And that has not happened over the past several months. We normally see the cutout markets trade firmer into June, kind of leading into summer here in the U.S. They didn't do that this year. And so there's been some things that have been a little bit different that make us think the consumers step back just a little bit, that maybe demand is still good, but maybe not exceptional like it has been. And so as we've seen all this unfold, the cattle futures market for sure has gotten more sensitive to this information.
Yep.
And, both live cattle and feeder cattle futures have come well off their highs over the past 45 days. Cash markets have come well off their highs the last 45 days. And so I don't know that I'm willing to go so far as to say the bull market's over, but something's changed. Something's a little different here just very recently for sure.
And then I suppose from a follow on from that, you sort of tied it into the discussion point there, demand. It's obviously the thing the Aussie market wants to understand. What do you believe there's any, talking with you guys over here and some other people exposed to the US market, do you think there is a bit of consumer price fatigue sort of creeping in at the minute? Like, even if demand did soften, it's still historically, I assume, would have to be considered right up there anyway. But does the market get the sense that the consumer's just stepping back a little bit?
Yeah, and I think that's, when we do talk about demand, right, I would be hesitant to call demand slow, right, or poor. Mm-hmm. It's just not as good as it has been. And so yeah, I mean, I think it's fair to say that the consumer has pulled back. I mean, consumers have been facing incredibly high beef prices, right? And when you add into the fact, I mean, if we look at the window that Ben's kind of referenced, right, we've kind of reinvigorated the inflation front on the consumer. Gasoline prices are high. And so if you're looking to cut back, I mean, it certainly would stand to reason that you could cut back at the meat case. You could cut back on dining out, right, which tends to favor beef consumption versus the other proteins perhaps. And so, yeah, I think that you're seeing the consumer shift some, and now it's just a question of, how long does this last, right? How long does this look? So.
And then is it also a case of potentially trading down cuts or into different competing proteins as well? Or is it, Like, what does that, like at a home level, what does that look like? Do you think they're going from, rump steak down into sausages and ground beef, or is it going into pork and poultry?
It'd probably be difficult to make the case today that you're seeing a lot of trade down into pork. Pork demand over the past 4 months has probably left as many questions as beef. Poultry, I could absolutely see some trading down taking place into poultry, and that would be a long-term trend.
Yes.
I mean, if you just look at what poultry production has looked like in the U.S. for the past 30 years, correct? Looks like the cattle price chart that Ben talked about earlier. And so yeah, I do think that one thing we continue to see, right? Chicken is the cheapest and most available protein in the U.S. And so I do think that it would be the benefactor of slowed purchases in beef and pork.
So then on a seasonal front, obviously we're in the middle of summer grilling season. How's that gone? And, from a seasonal perspective generally, not asking you to look forwards, but with demand, how does that look leading into, fall and winter? Just give the Aussies a bit of an understanding of the US market's consumption leading into, maybe a peak period like now into the colder months of the year.
Yeah, I guess I'd characterize our market as having two main demand periods, kind of May and June. So like late spring, early summer, weather warms up, everyone gets outside, we fire up our grills, we go grill some steaks. We've got holidays in there as well, from Memorial Day, Mother's Day, Father's Day, and then 4th of July. So we've kind of got a period there where the weather's nice and we've got some national holidays. Then we have a lull from like the 4th of July to Labor Day in early September. Then we've kind of got a static period through September and maybe the first part of October. And then our second main, demand period of the year is the holidays. So Thanksgiving, Christmas, New Year's, that's really where you see the middle meat demand. So that's prime rib season here in the U.S. So we've got a good demand season in May, June, and then another one in, call it November, December, and right now we're just in the middle. So we're in a little bit of a lull. The cutout markets have come off their highs. We haven't really seen any, pre-holiday buying or pre-holiday upswing to this point, but I don't think that we'd expect that for another 60 days anyway. Along, your comments of consumers trading down, I think one thing that we have seen this summer, I saw a chart just recently that was just showing tenderloin prices. So think your highest value meat cut here in the U.S., tenderloin markets have been more flat, and ground beef prices have been firm. I mean, we've had ground beef prices that have been record high. So I think there is some consumer trade down in the beef space, specifically from the very high valued stuff to ground beef. Ground beef demand is still very good from what we see.
Yep.
So I do think that we've seen some of that this summer.
Yep. And then moving beyond that, obviously for Australia, 80% of our beef goes export. It's always what we're looking at, really. A few announcements recently between the Chinese government and the administration over here. Has is exports coming up coming up in the discussion for you guys? Like, are you hearing it in the marketplace that anything in relation to exports is really becoming a discussion point? Or any comment on that?
Yeah, I wouldn't say so currently. Obviously we export a far smaller percentage of our production. And I think right now one of the reasons that you haven't heard a lot of that discussion is demand has been so good. And so, I think there will come a time if this trend continues where we'll see an increased attention placed on those key export markets, whether it's, the Chinas, the Japans, the South Koreas, for some of the higher dollar cuts that those countries tend to take. But I think here of late, it's just demand's been so good internally that's been kind of secondary in terms of the supply and demand stories.
We have had an announcement back in May that the Chinese were going to relist some of our export facilities, and they got that going. And we are shipping some beef to China today, but it's in very, very small quantities. Several years ago, China had grown to become a top 3 beef market for us. They went from nothing in 2019 to a sizable export partner for us in 2024. I don't know that my years are exactly right there, but something like that. And then they shut us off for a couple of years, and now we're back, but it's in a very, very small way. But to Adam's point, we don't have a significant amount of beef to sell internationally. Domestic demand has just been so fantastic. But, if Australia and Brazil have been quoted out in China, maybe that opens the potential for some business to the U.S.
And we're certainly not entirely. We're still sending a bit, but we're pretty much out of that market now for a period. The Brazilians are getting very close. If they haven't already got there, I reckon we'll see it this month that they'll hit their quota, and we're the same in South America. But yeah, I mean, it's just interesting, I think, for the Aussies to understand. Obviously, the focus is locally. You've really got to look internally. There's no need to look too far outside your own backyard at the minute. So I was just interested to get your perspective on that. I suppose another one, which I don't know how many Australians actually understand the level of sophistication and the scale of the market in the US from a risk management perspective. It's probably twofold, this question. The first one, give us a bit of an idea, or give the Aussies a bit of an idea about how one of your backgrounding or ranching producer clients utilises StoneX and the tools it offers from a hedging perspective in their businesses. Like, how do you see them, engage and utilise risk management tools? Just to give the Aussies a bit of an understanding on that front.
Well, I mean, I think one of the things that really helps so many stages of the industry here is the variety of tools that we have. We've got a feeder cattle contract. We've got a fat cattle contract. We've got, corn and feed futures contracts that they can utilize to hedge. And so really kind of wherever they are throughout the supply chain, they've got an offering, right? Mm-hmm. They've got tools that have liquidity that provide them the opportunities to mitigate risk. And so I think that's probably the most important piece, is just they've got the products.
Yeah, we've got exchange-traded products, the futures and options that Adam mentioned, obviously super popular. We've got a relatively new product in a government insurance program called LRP, or Livestock Risk Protection. So it's a government-subsidized put option, for lack of a better description. But that has become extremely popular, especially with feeder cattle operators, stockers, cow-calf operators. Maybe not quite so much on the live cattle or the fed cattle side yet, but I think that's got the potential to grow. So yeah, multiple tools available, liquidity in the futures market that goes 12 to 18 months out forward, plus these government insurance products allow producers a number of different risk management alternatives that they can take.
And I suppose the liquidity is always the golden goose, but how have you seen, like in your careers at StoneX and careers in the beef industry, how have you seen the US market adopt these tools to actually give the marketplace the liquidity it needs to make these, or make use of these tools, beneficial? Like, obviously liquidity is key, but how have you seen change over time in the adoption of risk management tools in the US marketplace?
Well, with 20 years under our belts, we've always had liquidity in futures. I mean, the futures contracts go back to the 60s and 70s, so there's been some liquidity and some history there. I think the one major trend that we've probably seen play out is just more use out of options. I think we are probably utilizing the options markets now more than we were 25 years ago. I'd have to go look at volumes and open interest, but that's my sense, is that our customer base is using options more now than they probably ever have. Mm-hmm. And I don't know that there's any one reason for that. I just think that the industry's kind of grown to like trading options. little more defined risk. Here's my downside, here's my upside, and they know what their premium costs are. Obviously, comes with some lesser margin requirements in many cases. So I think options have become more popular over time.
Mm-hmm.
I think you could make the case too. I mean, as they've been around, right, customers became more educated on those products. And then also, I mean, as we kind of talked about earlier here in the day, was the increased volatility in the marketplace, which has made options perhaps a more appealing alternative than just being outright long or short futures. And in our case, I mean, if you looked at the past 6 years, probably more appealing than being short futures. And so I think market conditions have certainly contributed to that as well.
Mm-hmm. Yeah, I think it's a good point you raise on the volatility in terms of interest or engagement with hedging tools as the market has become more volatile. And I think even the Australian market generally has become more volatile, which is why StoneX is in Australia wanting to provide a potential solution through the forward contract is for exactly that reason, is the volatility in price. I suppose to finish up on that front, not any words of advice, but any suggestions for Aussie listeners that are thinking about this type of situation, what should they consider and you know, any comment to make there for a listener that's involved in the beef supply chain when thinking about risk management?
I guess I'd just say just do what makes sense for your business, right? You know, you guys in Australia might not have the same, you know, wealth of tools that we have here in the U.S., but even if it's a fixed forward contract, if it makes sense for your business, you know, lock it in, do it. So I guess that's what I'd say. I don't know the risk management all that well in Australia, but I guess I'd just say do what makes sense for the business, whether it's on the cattle side or feed stuffs or interest rates or anything else.
Mm-hmm.
Yeah, I mean, I think that's probably the way that most look at it here is from a margin management standpoint. And so taking away, you know, instead of looking at all of these variables independently, it's looking at them together and thinking, hey, if I can lock in prices against all of these variables simultaneously and I can secure a margin, that's ultimately what will matter at the end of the day, right? And it's what keeps me in business. So,
no, brilliant. And one more question to wrap up. David in Northern New South Wales had one, and I think it's pretty poignant. David asks, what change, if any, have these high cattle prices in the market brought about on the production side in the past 12 months? And what changes do you think can be expected if prices remain around these levels?
I don't know if I would. I guess the first change that comes to mind from the production side has been the increase in acceleration in carcass weights, which I think has been identifying, hey, if I've got a cost of gain that's $1 a pound or $1.10 a pound, and I can sell the animals for $2.55 a pound, I might as well put as many pounds on this thing as is bearable.
Yeah.
So I guess that to me would be the largest and most significant change that we've seen. It's kind of a continuation, but it certainly seems like it's accelerated in the past 2 years.
I mean, this is having an impact on all different segments too, right? I mean, Adam mentioned the producer side, but the packers, we haven't mentioned packers once yet on the podcast. They're really, really struggling here in the U.S. Downsizing, I mean, we've taken some packers out of business over the past 6 months, and we may have more to go before it's all said and done. So the high prices it's putting, you know, some people in a bind, and the packer is one of them right now. Packing segment.
Yep. And that it is a really good point, which I think David probably has raised there that we've uncovered, and we haven't mentioned the packers at all. There has been a bit up and down with unions and agreements on pay and those sorts of things, and plants opening and closing, and Benny, you sort of mentioned it. We think that does the market or is the market even considering the consolidation and slowdown in kill chain that could potentially happen over the next 12 months? Who knows? Like, is that even being considered or discussed at the minute, or it's just sort of all guns blazing, keep sort of marching forwards?
Oh, I think we talk about it every day. I mean, it's something that comes up every day. The Packer margin situation is not sustainable.
Yeah.
I mean, they've been losing, $200 to as much as $400 a head for a year, more. And so they've taken some capacity out. They might have to take more out before it's all said and done. And then what's that mean 5 or 6 years from now? Say we have, more cattle supply by then. What's that mean when we don't have, processing capacity? So it's probably a long-term concern along the lines of why our cow herd can't increase. We might find that a few years from now that we don't have packers to support that kind of increase. So I think that story's still being written, but I think that's the concerning part of taking packing capacity out.
Yeah, I definitely think that to this point, right, I mean, the capacity that we have lost, we were able to withstand it because of where we are, I mean, in the herd size, right? And so with each of those closures, while impactful to local producers, right, it was something that we could shift around and still, process and slaughter the animals that were needed. But yeah, longer term, eventually when this cycle does turn, that will be one of the interesting things to follow, is what that looks like after that.
Fellas, been fantastic today. Is there anything I've missed or anything else that we haven't sort of covered worth bringing up?
What about your guys' thoughts on your domestic industry? You guys have obviously been in a considerable growth phase.
Mm-hmm.
We know that the trend that we've had bringing in product from Australia. What's your outlook here over the months and perhaps year ahead?
Our view of the US, or how we're performing at a local level?
Australia, your local level.
Yeah, look, production's going to stay strong. Slaughter volumes this year on track to reach near 50-year highs. Production on track to reach a new high in terms of overall beef output. Likely the same again in 27. We've been really fortunate season-wise. The major cattle-producing regions of the country, Queensland, the Northern Territory, accounts for about 60% of the total beef herd in Australia, has had 5 to 6 average to well above average years, and that has ultimately meant the cow herds just continue to grow. It hasn't had a really bad run in terms of seasons. So, yeah, the view at a local level is that will continue. There's potential isolated cases of rebuild after liquidation for the southern half of the country in 24 and 25 and earlier parts in that central eastern region of the East Coast this year. But generally, yeah, volume is going to be very strong. Big exports, record exports again in 26. So we're at the complete opposite end of where you guys are. We've never produced more beef. JBS came out with their results for Australia earlier this week, and JBS itself as an Australian business, record beef production ever, which is what we're sort of seeing mirror in the sort of macro picture. So yeah, carcass weights are up, lots of cattle on feed. It's in a pretty healthy position from a production perspective for sure.
So we should continue to see some exports flow from Australia to the U.S. then?
Yeah, definitely. Yeah. At the minute, it's about 30% of our total exports that occupies the U.S. market. And then obviously we've got China, South Korea, Japan are the other big three in that big four. But yeah, you're definitely going to see plenty of beef from us. I think the big one is the gorilla in the room, which is South America. Yeah. And that's really the question mark, I think, for the Australian market moving forwards is how we deal with that challenge, because they're not going away. They're going to become more and more integral to the market generally, the global export market or global meat market. So, yeah, that's the next frontier for us to face is the South Americans.
Perfect.
Cool. Well, thank you for today. It's nice to be able to do this in person. Usually it's on the phone or something. We have a yarn, so it's nice to get to do it face to face. Appreciate it.
Thanks for having us.
Yep, absolutely. Good to see you, Rip.
Cool. Next time, I'm going to jump into the recently released ABS Q2 slaughter and production numbers for Australia. I'm going to break down what that's telling us for the first half of 26 and also compare it to then how last year's performing. Plus, if it's available, hopefully Meat and Livestock Australia and Alpha will have released their Q2 feedlot report, so we can get into that, see how full feedlots are, how many cattle we're turning out of feed yards and all that kind of detail. If the episode today with Adam and Ben's raised any questions, make sure to reach out and send me an email to ripley.atkinson@stonex.com or record a voice note of yourself, where you're from and the question, and I'll get to answering it in the next episode. If you've enjoyed this or know someone who would, make sure you share it with friends and family. And if it has been of interest, make sure to like and follow the podcast on your favourite listening platform. But otherwise, thank you for listening, and until next time, take care. Cheers.